Hello, 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 traders. It was a slow trading of week last week, but we did have a few interesting technical moves, and most of the majors seemed to move up into the beginning of the week, and then without any clear-cut direction out of the EU summit, and actually a little bit stronger data out of the US. We have seen a little bit of dollar strength that finished the week off. Heading into the new trading week, though, we have few pairs that are in interesting technical positions that uh, we could see a bounce off or a breakthrough to dictate the price action into the beginning of the week. Let's take a first look at the Euro USD. As you can see, the Euro USD moved up last week, and it looked like it was going to move down. And to start the week, it was started right at the bottom of the fib range from the shallow move down since at the end of September. At that point, it looked as though the pair may have the chance to move down and start testing the fib levels from the larger move higher, starting at 127, 126, 124, and so forth. But the pair did gather a little bit of steam and pushed higher, and broke all the way through the fib levels, as you can see on last Tuesday, and then just basically settled in a range to finish the week off. If we look at this on a shorter term chart, we can get a better idea. As you can see, so it broke through the levels, and right now, heading into the end of the week, you can see that the pair moved back down to basically what would be support right here at the 0.618 fib, which comes in around 130.30. So I'm going to be watching this 130.30 level, and maybe even let it go down to the 150 fib at 129.86, but more so the 130.30 level to see if we get a break or a hold level. If we get a hold of this level, we can see that this was somewhat the range. We could get a pop back higher once again towards the 130, 170 levels, and that would be the monthly high from September. Now, if we break through these levels again, we could be basically in the same range that we were to start the month. And we can see the support would be down at 128.35, and then the 130.30 level would be resistance. But before I would jump on the bandwagon for a push lower, I would like for a break of the 50 fib here. As you can see, that did cap a lot of the price action, and that's at the 128.86. So really, I would be watching this entire zone for a bounce higher. And if we break below it, let's try. We'll highlight this area here. So remember that going into the new week. So we're going to watch that zone for a break higher or lower, and this is basically the resistance zone. If we get a break below this support zone, if we get a break below this, I would favor a move down lower towards the 129.35 level. If we get a stay higher, we could see a pushback higher. The next pair we're going to look at is the Great Britain Pound USD. The pound lost quite a bit of ground this week after moving up once again to test this descending trend line and the 161.40 level, which had significant fib support, to end the week on basically a rather sharp push lower, but basically just to go back just down to where we have the lows of the monthly support, which comes at the 0.382 fib at 160.60. I think I gave this exact same analysis in a weekend, last weekend, or the pair basically heading into the new week is all going to be about this 1.382 level, 160. If we get a break below this, we can be on our way down to the 50 fib at 159. Now, if we get a hold here, we can probably see once again another test of this 161 level. So basically, you have to watch the price action right here and look for a break higher or lower to get an idea of what you want to do with this pair. This last slope was such a slow, gradual, grinding slope that I thought we could have the momentum to push higher there, but we did not. So basically, watch this price action, and we'll make our decisions from there. The Aussie USD. Similar, you can see the pair rejected once again at the bottom of this resistance zone, then this support zone, that has held the pair 1, 2, 3 times now between 101.75 and 101.50, right above the 50 fib at 101. That pair did move back up to a retracement of the 50 fib from that move. It's all about the 50 fibs in this pair. Right up here around 103.86. We'll just say 104 because that's where the rejection actually occurred. Now, heading into the new week, this zone right here is going to be telling. If we break below the bottom of this zone, which comes in around 103, we'll probably head back down towards this support zone down here at the bottom. Now, if we get a break above this zone right here, we could be on our way above the zone starting at the 50 fib. We could be on our way to a push higher towards the 105.20 level. But until that happens, all we can do is just watch the price action right here between 103 and 104 to try to get an idea of what we want to do. And then turn around and stand aside until we get a break. The New Zealand USD, very similar. You can see the cross broke higher during the week, but it's basically the cross is just in a after breaking above that descending trend line, it broke higher. As you can see, the cross really is just in a chop zone right here, and the top of the zone's at 82.35 and the bottom's at 81.30. What I would do, which is basically the 50 fib from the move higher in September, what I would do in this pair right now is just play the range until the range breaks. So any move down to 81.30 could be a buying opportunity, any move up to 82.35 would be an opportunity to sell. The USD CAD, on the other hand, you can see this pair has broken higher, broke above significant resistance here at 98.85, and looks like it's on its way to 99.50. We'll watch this level here at 99.50 because very similar to like the Great Britain pound. It's a similar resistance level, important resistance level, and a break of that level, or New Zealand at the 50 fib, or in the CAD, if we get a break of that level, it could change things where we could see a real risk-off environment, and we could see it move all the way up to parity, followed by the 101 level. So this is an important price level to watch into the week. I would expect that we move up to it and break down a little bit, because maybe do something like that, and of course that's purely a guess. The 99.50 level, because it has been kind of going up in a straight line, so we may see a little bit of pullback and profit taking. Watching the 99.50 level into the beginning of the week, and any pullback towards this 98.85 level could be a good opportunity to buy into, looking for a push higher. The yen, on the other hand, ever since breaking above this descending trend line that has contained the price action so far for the last 3 or 4 months, has been gradually moving higher, just heading into the new week. Just keep in mind that 79.65 is resistance and 78.85 is support, and you can trade the dips and you can scalp this pair to the top and the bottom if you like. The Euro JPY, on the other hand, on this trade here, which we spoke about last week, after breaking through the 50 fib and the descending trend line, did move up all the way to test the 104 level, but then which basically is just about the highs from last September, but now has rolled over, and I would expect the pair to maybe come down and test the 50 fib again at 102.75, and that's where I would look to watch the price action for a bounce higher or lower. So the 50 fib level is the do or die line, the line we're going to be watching to make our decisions. The Aussie JPY, on the other hand, broke above the trend line and continued to move up towards the 82.50 level. Now the price to watch is not so much as 81.93. I would watch to see it retested this trend line to see what we get here. If we get a bounce higher, we can be on our way up. A break below, though, we could easily be on our way back down. So this is the bull bear line right here. This is the old descending trend line. Let's see what the yen pairs. New Zealand JPY, we actually posted this trade on the site. If you get a break below here, we could see a move lower towards this. I mean, when we get a hold here, you could see a move lower towards the bottom constant range that we have right now at 63.50. 65 is the top, so we'll look at play this range. 65.50 is a nice resistance zone. Let's just check these other majors out. The CAD, we've talked about many times. It's playing the range. You sell, buy the 50 fib, sell at the top of the at the 0.618 fib at 89.92. That's pretty straightforward. The Great Britain JPY is just bouncing around in the range. The top of the range is 127.48. The bottom is this 125 level. So you can play the range there, and you can try to scalp the fibs, which we can see the 126.66 levels for 38 and the descending trend line. All right, so most of the yen pairs we have a little bit of congestion, and you can play the range in New Zealand yen, CAD yen, and Great Britain yen. And the Aussie, we're watching for a pullback of the descending trend line. The euro, we're looking for a move back down to the 50 fib. The USD JPY, looking for the range to play, 78, 79.65. The CAD, where you could see a push up to the 99.50 and parity. New Zealand, we're watching the 50 fib at 1.8132. And the Aussie, looks like we're getting a slight pullback here. We're going to see the price action between the bottom of the zone and the 50 fib. The Great Britain, it's all about a hold of this 0.382, but down below we can head to the 50. And the Euro USD, we're watching the price action right here between 0.618 and 0.50 fib levels. All right, everybody, that's the weekend wrap. Enjoy your weekend, and let's make some pips on starting on Monday.